So as soon as the word got out and the market started to rally coming into the second week of January, we had a situation where the yields have relaxed. There was certainly buzz about the Fed doing some kind of pivot. The bad news became good news, so to speak, in terms of economic data, and risk was on, and there you go. I mean, Bed Bath & Beyond's a great example because facing bankruptcy, never mind. Let's just drive that stock up because of this high short float.
Oh, yes, indeed. And not just that. I mean, I'm looking at MicroStrategy, right, which is not like had fundamentals dwindle down to nothing. Rally up 68% so far after 70% plunge, pretty much recovering all the losses from last year. So how do you look at this one? How do you look at this story?
Well, there's a couple of factors. One is Bitcoin actually held up relatively well as the market was trending lower there in December. Bitcoin never really broke below the 16,000 mark. And I think that brought in a lot of just short covering in terms of the MicroStrategy, and that started out. And then, as you mentioned at the top, was the retail investors came in to support it. And so MicroStrategy, I mean, in terms of the fundamentals, a lot of it, of course, is going to depend on the future of what happens here with not only Fed policy, debt ceiling, interest rates, inflation, et cetera. So we'll see if it's sustainable. But yes, that was brilliant if you were on the right side of it.
If you were on the right side of it. And, you know, I always worry, we've flagged this before as well, Michelle, about the retail investors who get caught on the wrong side when they get in at these levels. Should one get in at these levels?
I wouldn't personally, because there's a few factors at play. One is today's decline in the market was obviously at an overbought situation, but also based on some real technical analysis in that we hit major resistance in almost every instrument in terms of the sectors that matter and the indices that matter. Let's take just the S&P 500, for example, that wasn't able to clear over 4,000, which has really been the area that everybody's looking at. So I would say that it's not necessarily the end of the game at this point, but I would let the market settle, and I would certainly wait to see what happens with the whole political situation with the debt ceiling, because as you know, that can wreak a lot of havoc, as we saw back in 2011.
But do you think with some of this action, Mish, it's because there isn't, I suppose, the alternate participation? Because you get that countenance when you've got people that are really trying to put on the short squeeze, especially these retail investors. They're trading in options, they're trading with leverage, and they're trying to obviously drive the profits that they've been able to achieve over the course of the last few weeks. But do you think that there's going to be, perhaps once everyone comes back from their holidays, a situation where they're all going to get crushed? So they potentially know this because of 2020, and they're perhaps what we saw today getting out of the game already.
Well, I know that we have talked about this. You hope that the retail investor has gotten smarter over the last couple of years, particularly in 2022. You know, what's interesting is, yes, MicroStrategy obviously had an incredible run. But if you look at the ETF MEME, so aptly named, that rose 18% until today it declined 2.5%. But it was down 70% last year. So you may have these pockets you can drive up. But if you haven't learned some level of risk control, if you haven't learned some level of where to take a profit, if you haven't learned basically how to be nimble at this point because of all of the extraneous factors that are involved in the market right now, then yeah, you might get crushed. So here's to education for retail investors.
I believe that you have a position in Pinduoduo. I don't know whether you have bought Alibaba, but the frenzy there is getting reflected with Chinese ADRs too. You know, we've just come across a survey from Bank of America stating that 90% of fund managers are saying this year is going to be China's year.
Well, it's so interesting that you would bring that up, because China's also in a situation where there are some big changes that are happening and have to happen in that country. And of course, there's, in terms of just where they are in the geopolitical space, there's still unknowns. In terms of the trade relationships with the United States, there are still unknowns. But yet they obviously are very, very committed to the development of that country. So I think, once again, there could be an influence in terms of what happens globally. But as the ultimate space towards heading into more anti-globalist, that's where China can actually really shine versus, let's say, a country like the United States that's been so globally dependent. So, yeah, I think that you have to pick your spots carefully. Baba, interestingly enough, with Cohen buying millions of shares, has done nothing but go down. So he's not exactly the Midas touch. But that doesn't reflect what could happen. But I would be very patient here, even with the Chinese ETFs and companies.
But Mish, I've got to ask you, is this for the long term or is this for some short-term trading activity betting on the upside? Because I would imagine you've got to be concerned because you see, I suppose, the reports this morning suggesting that China, it's going to be a state-owned enterprise, they're going to be taking over the ride-sharing industry. They've obviously taken out those golden shares when it does come to some of those major tech companies. Shouldn't it be worrying people that there's the prospect that you could see similar circumstances occurring with them, if in effect, taking over these corporations might not be today, but it could be tomorrow, if that makes sense?
Well, we've certainly seen history, right, with Alibaba and Jack Ma. There's been back and forth. So it's kind of, I'd say, hard to predict exactly what's going to happen. But just from a logical standpoint, one would have to assume that President Xi has also had a tremendous amount of lessons to learn over the course of the few years, one being with tech, of course, one being also with just the whole real estate area, and the other with COVID and what can happen there. So if cool heads prevail and he's going to be more state-run, and he's going to yet also try to continue the meritocracy that goes on in that country, it's possible that they can emerge as a winner in all of this. But once again, I would certainly be very, very aware of what happens just all around with Russia, Ukraine, and India, and BRICS. I mean, there's so many factors right now. It's actually kind of mind-blowing.